Joining me, Peter Tchir, he's head of macro strategy at Academy Securities. Going to continue to chat with us and some of the market dissection here. So, Peter, we are off the lows, but we're also off the highs of the session. Are we scoring an F today, or maybe like a D minus, if maybe we can stay up off the lows?
You know, maybe a DD minus, but I think the stage is set for lower lows. Whether we bounce tonight, and I think there's a decent chance maybe Japan says something to try and slow the appreciation of the yen. Maybe that gets markets happy. But I really think the story is just it's a combination of so many things. Yes, the yen carry trade's probably important, but that's only one part. I think that helped trigger some of this movement. You've had overbought conditions. You've had the fact that we call these investments passive, but it's really momentum, right? 50 cents out of every dollar going into an S&P or NASDAQ fund is heavily weighted to a few stocks. Those are coming under question. So I think there's a lot more room to go. And separate from that, we got all those vol selling strategies. They became hugely popular. Well, guess what? When you sell vol, we always talk about it. You're picking up nickels in front of the steamroller. And we haven't really seen that steamroller for the last 6 months to 2 years. That steamroller is appearing. It is scary when that happens.
Yeah. What do you think, Peter, when we attribute the kind of main cause of this, or is that a fool's errand to try and isolate it to one thing? It seems like we got hit with a lot over the last week.
Yeah, I think it's really probably a fool's errand, as you suggest, to attribute it to one thing. To me, it's always what triggers and what triggers next, right? And so a couple of weeks ago, you had some weak earnings, and then you started seeing volatility change. So you had these funds that target volatility, right? So they try and balance bonds versus equities and to create a kind of relatively, neutral volatility profile. As volatility rises and correlations change, they have to be sellers. So that fed on this. You've had momentum's probably been the single biggest factor that's worked this year for hedge funds. And really that's been NVIDIA and the entire AI story. As soon as you start putting some, cracks into that, that starts unraveling, you're getting fund flows out. And what really scares me and why I think we still have more downside, I haven't seen strong evidence of, capitulation. Maybe we'll get some of that today, but we've seen a lot of, degrossing with people like shrinking some longs, shrinking some shorts, coordinating a little better. There's been some rotation, but we haven't seen de-risking. I continue to watch TQQQ, SQQQ, and then mostly of late, NVDL, which is an NVIDIA levered ETF.
Yeah.
I have no idea why the SEC approves it. That keeps getting inflows in.
Wow. Okay, so it looks like we're going to be dragged kicking and screaming out of some of this speculative stuff then? You think people really are going to keep going for it? I think about like the chart of Bitcoin, where you are getting back to each previous high within like a thread, but then we're not getting to it, and then we sell off again, right? Like the chart of Bitcoin is making this very clear. Lower highs, we make a lower low, but then in some of these higher beta assets, we push right back up to try again. So it seems like, if we take this as kind of an example, that folks are not going to give up easily here. I mean, this could be a serious fight.
Yeah, I mean, just go back to, triple Qs, right? Wednesday, they were up 500 some odd points, right? So it's not like this hasn't happened in this space either, right? So people keep fighting this. And I just think every time you're getting these lower highs, you're not recapping them, and then you're getting new low lows, people are wasting that money. They've got the, cash on the sidelines been put to work. It's evaporating. And when I look at my, Twitter following or whatever I want today, about 95% of emails are suggesting people stay calm or invest, right? I am not seeing anyone other than maybe myself and a couple others saying, you do not want to get involved here. You want to wait for a better buying opportunity, which I think comes either later this week or next week.
What do we do in the meantime? Some of the stuff that's working today, you could go for like funds that do include some shorts, like the anti-beta fund, which will actually short the high beta stuff, BTAL fund that I mentioned. I mean, bonds seem to be doing well earlier, but then they faded in the middle of the session. So you do kind of wonder, as the Treasury bid expired, what's up with that, Peter?
Yeah, so I recommended to my clients to take off some duration today, right? That's been a great trade. And, even if you look at investment grade bonds, or high yield bonds, investment grade, the spreads have been widening, but the price is high. Munis have done okay. So I would recommend taking some money off of there. Interesting enough, I'm actually watching the Chinese stocks again. I think we talked about this off and on this year, right? I really liked it. We took some chips off the table. FXI is actually barely down today. China's story is becoming a little bit more interesting. And China is broken away so much from the US, right? It's Chinese brands, China selling their brands both into China and elsewhere. So I'm starting to buy some FXI again.
Okay. Yeah, the stock of the ETF has come off pretty substantially. I'm seeing like copper get walloped today too. Commodities are not terrible, but not the best. I mean, crude already hit a low basically last week. Are you worried about any of the signals from the commodity market as it pertains to the China trade?
No, so if anything, I'm looking at buying oil stocks again. We like that. Basically, I think the global economy is slowing. We've been talking, I think, for the past few months that the data has been overstated. We're just starting to face the reality that the Fed's behind the curve. They should have cut in July. The economy's slowing. Jobs are dissipating fairly rapidly. So all that's bad for the economy. Why I still like energy, though, is the geopolitical risk is mounting, right? There is a real threat that Iran does something to retaliate to Israel in the coming days. Russia might be looking opportunistically to do something. And all of those are going to be very good for energy stocks because they're going to have to respond. We're going to have to ramp up domestic production. So that's the one area I'm definitely adding to today is the energy. And it's really not because I think the global economy is good, but because I think we're about to have a supply chain sort of hiccup due to a geopolitical event.
Last time you were here, you were making the case for the Fed to cut in July. I guess maybe you feel somewhat validated now that, the whole community basically seems to be crying out for it.
Yeah, it's kind of seems insane, right? When we first talked about that, that seemed like a crazy idea. I think by the time we got to the meeting, a lot of very serious economists were talking that they should cut. Now what cracks me up is people are talking about emergency cut or a 50 bip cut or something like that. I think nothing has changed from the Fed perspective. They are still on pace to do 25 in September. It's going to take much, much worse data consistently for them to get to 50 basis points. And they are not going to do any sort of emergency thing, right? If you have any hope for a nice, strong bounce overnight, it's going to become from the Bank of Japan, where maybe they sell some yen, something to slow down this, increase in valuation there. Other than that, the Fed is off the table. They are not going to come out. They're not going to be supportive of this market. They do not want everyone to start thinking about the Fed put again. So get that off the table. And again, that's not going to be supportive for markets once people realize yields have gotten ahead of themselves too.
All right, good stuff. Good setup for stocks and bonds on our next conversation. Peter, thank you very much for your time. Thanks for jumping on with us.
Thanks for having me.
You got it. All right, back into the China trade, taking off some of the duration and waiting for deeper dips in stocks to make a move. Peter Tchir of Academy Securities.